All right, hey there, everybody. Chris Franks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, February 8th, 2022, and a very sunny but cool day here in Boerne, Texas. Hopefully, y'all are doing well. I see Crypto Mowgli's here. Who else is here? HJ is here. Daniel Mendez, what's up, man? Bamboo, Data, Spiral Architect. Good to see y'all checking in. Everybody else listening in. Great start to the weekend into this week with Bitcoin. Had the breakout of that 3-month resistance that I'd been telling you to watch, hitting targets that we were looking at. I mean, everything just kind of really working well at the moment. That doesn't mean that you say, oh, forget your risk management, it's all done. It's definitely going up. I think it's making a good argument for it right now, but there are levels we still need to get through. But that said, definitely a good start to it. So we'll talk about that. KPMG, the Canadian branch over there, mentioning that they're into Bitcoin and Ethereum now. Didn't tell us how much, but it's a pretty big move into it, as is becoming more common now with these larger institutions. The big thing there being the regulation that's coming. I told you, if you guys have been following me for the last couple of years, I said that, this next bull run, which is this one we're in, we would see, among other things, countries doing their stable coins, the central banks doing their own stable coins. I talked about how this would be the main kind of where the institutions really start getting into it, kind of like that adoption area there. And so now there's a report by Wells Fargo mentioning that we may be coming to that hyperinflection point that just kind of sees adoption and no looking back type thing. So, you're still in at a good time, guys. It's sometimes people look at this and go, oh, well, if I'd gotten in a couple years ago, I could have got in, at $1,000 or something. Now it's, whatever it is, 50, almost 50,000. It's been up to almost 70,000. It's too late now, but I don't think it is. I think there's, as I continue to say, if this thing is going to continue on and be something, then it's, you've still got time. You should be, allocating a little bit to it at least. Now I'm not a big fan of ever being overly risky and putting everything you have into something. If you're right, then yeah, the payoff's great. But if you're wrong, you're screwing yourself. So, but I think everybody, as I've mentioned, should at least have some bit of their investment in, cryptocurrencies, especially, Bitcoin, Ethereum, those bigger names like that. I know everybody wants to get rich overnight nonsense. But the thing is, you may or may not make it. Again, the idea that you're, taking on entirely too much risk with your entire portfolio. You don't want to ever do that. So we got that going on. We've got CPI number coming out Thursday, guys. So that's the U.S. inflation number. We'll see how that goes. Last week, what was it last week? We had the ECB come in and say that they were going to, their emergency bond buying, they were going to tone that down, get out of that. But they were still holding off on saying they were going to raise interest rates until next year. But, as I've said previously, I think they'll probably end up raising it by the end of the year at least once. The U.S. is looking at much more likely 4 interest rate hikes now. Excuse me. I talked to a few mortgage guys. They believe the same thing, probably about 4. So, we're moving up on there because everything just continues going out. U.S. last week had that blowout huge jobs number. They were looking at, potentially a job loss number on that. And the consensus, possibly that. The consensus was about 150,000 jobs added or whatever. And, of course, they were well above that. So, everything in the U.S. still, whether you believe that the Fed can control it or not, everything that's happening, with prices rising and job growth, employment continuing to grow, year over year, wages growing. This is all the fuel the Fed needs to raise interest rates, and to raise them faster and harder, normalize their books better, faster and harder. So, it doesn't matter what it means or what it really, what it may really do. It just matters what the Fed thinks about it, because that's going to determine what the Fed's going to do. So just keep that in mind. I see a lot of nonsense still going on about people talking about the death of the dollar, how it's going to collapse. Guys, if you believe in that nonsense, get yourself checked. Seriously. All that's going to do is make you lose money. There is no way you're going to make money right now thinking that the dollar's about to collapse. It is nowhere near it. Okay? That doesn't mean it won't at some time in the future. It doesn't mean that I'm a supporter of the U.S. dollar, against everything else, the U.S. government, all this other fun stuff. It just means that the reality of the situation is the dollar is not collapsing anytime soon. So stop trying to invest or trade as if it is, because it's just going to cause you to lose money. All right? A lot of people lost a lot of money last year trying to short the dollar and dollar, assets like that. As the dollar just continued to rise, and as it continues to rise. So, you've got to be more mindful, guys. Trading and investing is not a place to listen to somebody you don't know online who's some conspiracy theorist who has no real background in what they're talking about. Okay, so just be careful out there, guys. It's easy to get caught up in it. You guys have to understand, man. Social media, it's such a purveyor of unilateral thought. Okay, it doesn't give you a lot of chance to open up your thought process. It kind of, because these AI systems that they use, they curate the content in your feed to what they think you want to see based on what you've done and all these other things, these data points that you end up providing to them by using their platform. So it becomes an echo chamber is what it does. And it looks to you like, oh my God, this is what's going on. The world thinks this way. And in reality, it's not. So you guys have to be careful about that, okay? Let me see here. Who else is showing up already while I'm doing my little talk there? White R21, what's up, man? TV Canal is here. Let's see here. Blaze is here. Asim Risk is here. Let's see. Hydar is here. What's going on? Blockchain Gains. Mark checking in. Diego is here as well. Man, Mark, yeah, what did you say, Mark? Social media equals unilateral thought and no thought at all. Yeah, pretty much. It's just easy to get caught up in it, guys. Especially with the way, and I hope this isn't y'all, but most people today, in general, tend to work on sound bites. They don't really give a lot of thought. It's always been an issue that your religious beliefs, your political beliefs, all these things kind of are a product of your family, your familial circle, as well as your social circle, right? That's always been a thing. And so people have these, oh, I'm a Republican because, or I'm a Democrat because, or whatever. And it's really just because that's the thought process that they were raised around. It's not that they've really actually gone in there and thought about it. And so, that's always kind of been the way the thing is, but the social media just really just kind of makes that social circle, more stronger against you. It makes it more, stronger. Where it really seems like things are the way that they are not. But so I just want to kind of warn you guys against that in case you are not really aware. Most people aren't really aware, again, just because we get so used to this whole soundbite thing. But if you be honest with yourself, a lot of people lie to themselves about this. They really do. They honestly operate on sound bites, but then they'll tell themselves they don't. They'll lie to themselves about it. We do that. We tend to do that, guys. Be honest with yourself, because working on sound bites is not going to get you anywhere. It's going to get you hurt more than anything. So you want to be careful about that, all right? Diego says, I don't look at crypto Twitter anymore. I'm trying not to get influenced by any of that. Yeah, it can be, especially if you're newer traders, guys, the social pressure that just kind of comes from listening to so many people in a vacuum saying the same thing, can really affect your thoughts. Even if you normally don't think a certain way, it can really kind of get you thinking that way. And again, this all comes out to this whole idea that the dollar's supposed to collapse, right? It's just nonsense, guys. And anytime soon, anyway. It'll probably, historically, it'll collapse at some point. Historically, we're actually going on a pretty long run for this fiat currency, but there's nothing happening at the moment right here. Oh, hyperinflation, guys, it's just nonsense. And I can't do anything but just tell you that it is, and then you're going to have to decide if you believe that or not. But, again, I've been doing this for quite a long time and pretty successfully. So take that for what it's worth, I guess, right? I do have a certain, educational background in it as well. So, I've got two things there going for me. Ace and Rich says, I'm canceling myself over most everything I said in my 20s and 30s. I think we all do if we're smart, right? I've got the bag. Says, it's so true. I have to tune out on crypto Twitter because listening too close will only influence making decisions. Yeah, it really does. And remember, guys, the whole reason to be in there trading is to make money, right? It's not to get caught up in whatever, all the silliness that everybody else talks about, everybody else says. It's about to be successful for you. And so sometimes, but you just have to do something different. You have to get yourself out of the situation, which means you can't be lying to yourself, which we do so easily as human beings, guys, okay? ARM, what's up? Chemo's here as well. Good to see you guys. So here's the GBTC chart, guys. Remember we talked about this, and I had my thoughts on the spot chart, and then I brought up this and said, this kind of really supports that idea of what I'm thinking there, because here with GBTC we actually get the spring, and then we get this move out. And I said we were looking for an impulsive breakout above this swing high here. We do have that, as you can see. So again, everything kind of working out pretty well. Nothing guaranteed yet, though. As I said, but on GBTC here, it's looking pretty good at the moment. What we want to see is the pullback should just come back toward the pivot area, and then it should rally back up off that. And if we can get that, that's a lot of significance in the idea that the bottom's probably in. Again, just playing pivots the way we do pivots. If we jump on over here to the Bitcoin chart locally, here was my wave 3 target up here, 45,152. We went just above that. 45,519 or so. So less than 400. I was 300 and some change above that. But just a big wick up there and then a move back down. So I believe wave 4, parentheses 4 here, is in progress. Initial target is this 38.2 retracement at 41,731. Secondary target is a 50% here at 40,626. I'm leaning more toward the 38.2 just because we've got this base build here, so it makes more sense to bounce off that and go rather than breaking down and below it. But it should, if it does come below it, it should find support at that pivot. We did get this impulsive breakout here last week on Friday above that 3-month-long resistance there. And then we came back and retested it here and retested it here, which is what I said probably right when I was doing that counting there. Counting came out a little bit differently here, but, price action and volume over here, as I told Discord when we got this, we've got the price action and volume in this range here, suggesting that it's reaccumulation and it's heading up higher. And so, of course, then we got the 3, 4, then 1, 2, 3, 4, 5. So if we're, let me see here. If we bounce here, if we reverse at the 38.2, that'll give us a wave 5 target up here at about 48,100. If we do happen to go down to the 50%, it'll give us a slightly higher target for wave 5 there, up here at 48,860 or so. But that, according to my count, that should get us a circle 3, because I've got this as a 1, 2, and then 1, 2, 3, 4, 5, so 1, 2, 3. Now, there is the possibility, I had talked to Discord about, and maybe you guys, I can't remember if I did as well, but as this was pulling back here, I said if we broke down below this swing low over here, what I'd be looking at is wave circle 2, just making a flat correction. So A, B, and then 5 down for C, right? But we didn't get that breakdown, so I'm kind of with my other account still. But as I mentioned to Discord there, it's still possible this is a running flat correction here. So A, B, C, so 2 is here. And I bring that up because if this is 1, 2 over here, let's kind of get this over here then this will be 3, this circle 3 right here. This will be circle 4, and this will be circle 5, which means we'll have a 1 up here, and then a 2 will pull back and a 3 up. If this count holds out, of course, we'll have a 3, we'll pull back for a 4, we'll go up for a 5, and then we'll, that'll be 1 and then back. So we'll have to see as it plays out which one it is. But in either case, we should be looking for this pullback toward this area, this high volume node here, this cluster, or the pivot in either case. And then we should be rallying up toward, again, that 48,000, 48,100 up to the other target there. If we get to the 50%, we get that little higher target. So up though, up. We do have a pattern target here based on the height of that channel. They're at $57,030, so we have that target as well. Important things to note, we did break out above the first wave X, the lower wave X resistance here. And so that's the first real clue that the bottom is probably in. But we do still need to break out above this other one up here, 52,100, to add confidence to our count. But, you know, again, everything kind of suggesting that really it probably is. Let me kind of zoom out here a bit. On the daily, again, the idea is we have broken out large candle spread, large volume across that daily pivot. Again, the idea being that we'd break out about that, hit the R1 area, pull back to the pivot, and then continue up. So what we're looking for somewhere in this area to pull back to the pivot and then break out higher, and that should, like I was talking about on GBTC, that should pretty much all but guarantee that the bottom's in. Now, that doesn't mean that my primary count is still, is the one that it is. Again, I'm still looking at the idea of a 3 and then a flat here for a 4 and then a 1, 2, right? Which would mean this would be 3 of 5 heading up, right? But it could still be the triangle here as well. So we'll just have to see as this rallies up here, do we get 3 or do we get 5? If we're getting 5 up toward this up here, then it means, my primary count is still good to go. If we get it in 3 and then we pull back in 3, then, again, we start looking at this triangle here and heading up. Long story short, price ultimately should continue higher. In the grand scheme of things, we'll get the pullback here, maybe a push up and another pullback, but it should remain above the daily pivot. We should head up there. So, it's if you're an investor, and you want to buy and you go, man, well, I missed the breakout and all this stuff. I mean, everything's kind of screaming at you right now that you could, enter long here and continue. You'll just deal with the pullback and then getting up. But if you do want to wait, you can wait for the pullback toward that daily pivot and then go long. And you should be, I think, most likely good to go with that. No guarantees ever in trading, so you have to understand where where you need to go ahead and put your invalidation level and stop loss and stuff like that. But as I'm looking at this, there's a lot going on in there right now that's really kind of screaming that we're going to continue up, but we need to see that follow through. We've got to get up here above this, this wave X up here, the 52,100 kind of area. Just trying to make that clear, guys. Sometimes people come in here, you hear what you want to hear. Oh, he said I can go long, and then and then that's all you hear. You don't listen to anything else, and then you find yourself in a bad situation. So just trying to make it as clear as possible. Let me see here. Brian, what's up, man? Dominic is here. What's up, buddy? Hey, I appreciate you, man. Thank you. Jared, the great checking in, says, if you optimize your Twitter feed, it can be huge. Stay away from the phonies, which are 98%, and follow the quality analyst. Yeah, the hard thing is, especially if you're a newer trader trying to figure out what's quality, right? It's the same idea as if you're a new trader and you're coming in. Guys, the amount of information you have at your fingertips and for free is so incredible compared to when I got in. I got in before the internet was anything, right? I got back in 95. That was before AOL's unlimited access, right? I think so. If I remember right, yeah. So, and even that was modem connection, whatever. And there's barely any real information on there. You guys nowadays have so much access to so much free and good information. The problem is you also have the same access to some really bad stuff that sounds good. Sometimes half-truths, other times outright lies. And so, trying to find a quality analyst, similar to trying to find quality information for trading, guys. Like if you listen to most of crypto Twitter, Jerry the Great says 98% probably not worth listening to. And I agree. It might even be more than that. But, they're going to get up there and go, oh, well, Elliott Wave doesn't work. And technical analysis doesn't work. And they'll say silly things like, oh, it's all just gambling. If you see anybody saying anything along those lines, Wyckoff doesn't work, Elliott Wave doesn't work, TA doesn't work, technical analysis doesn't work, it's all just gambling. If you hear anybody say, just get away from the feed. Don't ever go back to them for anything. Because they are clueless when it comes to trading and they will never be successful. And if you follow them, you're going to have a hard time being successful because they're going to get you believing the nonsense. Guys, I'm here to tell you 25 years of doing this. I'm telling you, all that stuff is BS. It does all work. Most of the time, new traders don't put in the time and effort needed to learn a particular system and to get better at it. Just like most people don't put enough time to learn how to play the guitar or the drums or the piano or to learn to do art, paint or something, or play video games very well. They just get in there and they kind of go around a little bit, Apex or something like that, and get killed, and that's it. And and that's the problem. Just as human beings, we tend to be lazy. We don't really put effort in. But you know what it is? If you look at the professionals out there, what do they do consistently? They practice, guys. They get a mentor, a coach, right? So sometimes people go to these analysts, people like myself, right? And they expect that by coming to us that they'll automatically be experts at it and be able to be great at it. And the reality of it is it's not. The best we can be is like that coach or that mentor. We can help you understand how to use the tools correctly and do it. But ultimately, it is up to you to do it, guys. Ultimately, it is 100% up to you to do it. We cannot make you do it. We cannot make you adhere to the rules and the guidelines and do things you're supposed to. And so, again, I say this, guys, every so often I'll bring this up because, we always got new people coming in and watching. And I just want you guys to be realistic about what you're doing. Otherwise, you're going to fall in the group with the rest of that group of people who have no clue. They're completely clueless. And unfortunately, a lot of new people fall in with that, and they never actually get on to learn because they've been convinced that it's nonsense. Yet people like myself, Peter Brand, we're here for, decades doing a thing successfully. And, proof that it works. It just is what it is, guys, okay? Let me see here. What's up, Andrew Bennett? Good to see you. Better late than never. Ace of Risk, you're disappointed that Hank isn't there? He might have partied too hard last night. I don't know. Let me see here. Chemo says it can be that 69,000 was wave 3 peak and making an ABC down for wave 4. I have a harder time with that. I have a harder time with the idea that this is actually here because all the other counts through here come pretty clean as a 3 here or here. You got to stretch it a bit to make it a 3 here. I can't tell you it's definitely not, but what I will tell you is this. Again, you've got this pretty sharp kind of ABC here, right, for wave 2. And then you've got this drawn out overlapping sideways motion here for what is supposed to be wave 4. Whether it's there or, here, however you look at it. If you're looking at the idea that this is 3 here, then this 4 makes a lot of sense in terms of this because you've got, again, a pretty easy ABC and you've got sideways here. So theory of alternation. Again, you can make that same kind of idea for this here because you can say, okay, well, this is more drawn out and this is pretty quick and, easy going from here to here. Though it is more complex, takes less time, So I can't guarantee that, 3 is not up here. But I think whether it's here, here, or here, either, in any of those, I think we still go 100,000 plus. And as we go up there, maybe we come back and change where it is. But the important thing, again, guys, with trading is to identify the trend and go with the trend. That's the most important thing. With Elliott Wave, people tend to use Elliott Wave and they think, or new people to it, they think, oh, I'm going to use Elliott Wave because it's going to tell me exactly where it's going to go. Well, maybe occasionally you might be right, and it might get you pretty close. But the best use case for Elliott Wave really is just to identify your trends and your reversals in those trends. All you have to do after this is just get in, ride it for a bit, take profit. The difference between an amateur and a successful trader, a professional successful trader, is that the successful trader knows that the key to trading successfully is to constantly lock in profits. That's the secret sauce, guys. Constantly lock in profits. The amateur trader says, okay, I need to get the very lowest price possible, sell at the very highest price possible, ride as much as possible. And that's just silliness. That's why they end up losing money. Because they first of all, they don't have the skills to really identify properly where they should be targeting, invalidation levels, all that kind of stuff. But then also because, they think that ABC, right? And really, It's all gray. Trading really is just all gray. It's a bunch of possibilities. The goal is to try to understand if the possibility you're looking at is more or less likely, and then to continue add or taking away support for that idea as price action plays out. So yeah, I mean, that's what you should be doing, but it's what most traders don't do, right? I mean, that's kind of where we sit with all that. Let me kind of get back in here. There we go. Oh, let me see here. The mail out AOL disc. Oh man, you know what? Blockchain gains. I hadn't even thought about that. I completely forgot. Yeah, I used to have stacks of those stupid things. For those of you that are too young to know what AOL is, or what Blockchain Gains is talking about there, they used to send out the discs with the software on it, and you would load it from those discs, and they would actually physically mail it out. So yeah, crazy times, man. Yeah, exactly, man. That's my life right there, man. That's exactly what I go by. Always remember, if it's free, then you're the product. Yeah. Nothing is free in this world, guys. Nothing. If you think you have something for free, just recognize that it's not free. You're paying for it with whatever that you're potentially doing there. Okay? So, it sucks, but just make sure that you guys are aware that nothing in this world is free. Nothing. Chris Baker, what's up, man? Good to see you. Do I see E as a lower low, or are we building a strong support at 42? So you're talking about on the on this triangle here. If it's a triangle, it's going to remain above wave C over here. It has to. If that breaks down below wave C, then that invalidates the triangle as it sits here. Now that doesn't mean you can't go maybe A, B, C as C, but then C will have to end. It has to end above wave A. If you break down below wave A, again, invalidates that triangle. So if this is the triangle, if it's A, B, C here, you'll get D, and D has to stop prior to wave B up here. It has to reverse, end, terminate prior to where wave B is. And then E has to terminate prior to wave C. Now, I've just got this, I drew this out a while back here, but it gives just a possible idea, using the high volume nodes as likely areas of where we'll be looking for price to kind of get rejected and find support at. But yeah, no, if this is the triangle and this is the count, then E will not drop below the swing low here. We won't get a lower low here. Let me see here. Let's see here. Bitcoin Daily, do you see an inverse head and shoulders where the first shoulder is around January 10th, head at the bottom, next drop to 42K for the final shoulder? Let me see here. First says January 10th. Where is January 10th? This right? Nope. This one right here. So like this. Let me kind of draw this on here so everybody can kind of see what I'm talking about. I hate assuming that everybody's with me. Everybody knows. Maybe like this. That's possible. Because again, the expectation is to get rejected around the R1 pivot, to come back to the pivot, and then to break out higher. Yeah, so I mean, something like that is possible. We'll have to see if it plays out. Let me see here. What I don't necessarily like about it is usually we look for the left shoulder to be the highest volume. In this case, it would be the head there, so I'm iffy about that. But again, we don't even have to worry about that because again, generally, if you're trading pivots and you're coming up through the bottom of the pivot on impulsively, large candle spread, large volume, then usually what you're going to get is a rally up to the R1, a pull back to the pivot, and then a rally up, the pivot area. So I mean, even without having to worry about that being inverse head and shoulders, just watch for this. This may have been it. The move up to the R1, get the move back down here toward the pivot. It may only get, right in this area right here. And then rally up and break out above. Or, could boom, 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 and then go. Yeah, and that would make sense right here. You'd have, if it goes 1, 2, 1, 2, and then breaks out, you build this kind of base right here, right below the previous base right here, right in line with this kind of base over here, which is just on top of this Support resistance area here. Always look left, guys. Look at this. Support all the way through there, right? And then you come up here, and then you've got support here. All the way through there. So there's a lot of support in this area. So again, yeah, looking for that pull back into it and then move up. So again, might just pull back here and then go up and then come down and then break out above that high volume node over here. Visually, you want above this 47.3, 47.500 area. You want to see a nice impulsive breakout above that. And then you want to see it hold. So you want to see maybe a breakout above it, a pullback to it, and then continuing up. And then visually, this kind of area right here at about 57.4, 57.5 becomes your next visual target. And again, we're looking at this just based on your high volume nodes, where the interest in the market lies, not on anything else, not on, Elliott wave or supply and demand or anything like that. So, again, lots of different ways to look at the markets, guys. It just depends on what rings with you, what resonates with you, what you like. But any way you're doing it, you have to practice it to become good at it. You can't do it for 3 days and go, oh, it doesn't work. It's like any other skill. It takes months and years to get better, to become really good at it. But that whole thing is the whole product of the problems with new traders, with being a new trader, is because you want everything yesterday. You expect to get in there and become a millionaire tomorrow based on your $10 account today, right? And again, I remember this was me when I first started, right? 25 plus years ago. That was me. So I know what you guys are thinking. I know what you're going through. And you can lie to yourself all you want, but the reality of it is, it's what we all go through. Lying to yourself doesn't help you any with it. So that's kind of, this the important thing. I keep telling you guys, when you're a trader, your biggest enemy, your hardest obstacles are not the other traders out there. It's not Wall Street. It's not some whale or something, which CT is so caught up with. Years I've been in here in this segment, listening to all the nonsense about whales and I just, and no matter what I say, I can't seem to convince new traders that it's just a bunch of malarkey. It's just a bunch of BS. It's stuff that they don't need to really think about. But they do anyway, because it makes it for an easy narrative. And then in that way, they can blame their losses on somebody else. They don't have to take personal responsibility for it. Guys, at the end of the day, if you're losing money, it is 100% because of you. I promise you. It is. That's life, man. You got to get beyond that. You've got to accept that and understand. Stop trying to push it off on Wall Street or whales or governments or whatever else. It's a bunch of nonsense, guys. I can say this because I do this every day. I've done this for decades now. Different markets. So, versus somebody who just jumped in, has only been in the crypto market, guys. I mean, do what you need to do, but I think you give a little bit of deference to somebody who's been doing it for a lot longer in multiple markets. And when they say, hey, listen, stop with the nonsense. You are your own worst enemy as a trader. You are the number one. Your emotions are your number one enemy as a trader. They will do more damage to you than anything else by a long shot. Okay? So, I try to make that point clear as often as possible because it is such a difficult thing for most new traders, or amateur traders to kind of accept. But you have to accept it in order to move on and become the trader that you want to be, to get the kind of success that you want to see. You can't sit here and continue to believe that it's everybody else and that it's not you and expect that you're going to get anywhere with it. It's the same thing in life, guys. You're not going to get anywhere in life as long as you keep pushing off the responsibility of whatever's happening to you onto everybody else. Accept it was you. Accept it was your mistake. You didn't do right and fix it. You can't fix it if you don't accept it. Okay? Let me see here. You think this is an expanded flat here, A, B, and then you think this is going to go up to 55, 58? So you think that's going to be a 1, 2, and then head way down here? I don't know. I mean, I can't say it won't, but I don't know that I really... To me, that's definitely, if that's something that's going to happen, that's definitely, way off in the future here. We got to make it up there first. I think it's very low on probabilities. But like I said, you can't guarantee that it's not, right? Yeah. Yeah, we'll see. We'll see. I think right now this is best served as an ABC, which could be fine. This could be a 1, 2, and then an ABC for a 3 and a 4, an ABC for a 5. And even with something like that, you might get just below the swing low here. You might hit that 25 area, possibly. Just as an ending diagonal. I can't say that I would be really hurt by that. I would, actually, I'd love to see that. Once you're trading, you can never get low enough prices. So even if you're buying in this area or this area, you'd still love to be able to buy lower. So yeah, possibly there. But possibly. I don't know. Expanded flat, it doesn't make a lot of sense because you've barely gone up here. You're what? Not even 6% above that swing high there. If you're looking for an expanded flat, then you're usually looking for that 123.6, at least the 123.6, usually 132. Did I say 132? I got to think here. I don't think I have it on here. Well, anyway. But yeah, it's the 123.6 right there. You usually at least want to get that, at least. Because an expanded flat is the idea that wave B goes well beyond wave A, and then wave C goes well below, or, well beyond where wave A starts, and then wave C goes well below where wave A ends. This right here, coming at like 6% there. Usually if it's 5 to 10% above wave A, where it starts, it's considered just a regular flat, not an irregular flat. So again, you'd be looking for it potentially to get just below the swing low there. Which means the idea that this is a 1, 2 is really, really iffy if that's the case. Because it's come down so far, so deep into it. This should be 3 by now, right? Which if this is 3, maybe you could say this is a 1, 2. Well, then you're not getting up above this area here, because if you break out above that, wave 4 can't go above wave 2. So yeah, just some thoughts on that. But yeah, we'll see what happens there. Let's see. Let me see here. What do you got here? Ali, what's up, man? It says, how would one go about and buy Bitcoin as a longer-term investment instead of short-term trading it? I don't know. I don't know what you're really asking there. I mean, you would just buy it like you would normally buy it, right? And you just stick it into a wallet, and not touch it, right? If you're talking about maybe because on the same exchange, because if you buy and then you buy again, and then you take out, it's going to be first in, first out. That's how these exchanges work. So when you trying to exit on that, from that second position, you're actually going to take money out of the first position because it was the first one in. In that case, you would just buy it and just move it off the exchange into a cold wallet. Yeah. And then that way, your trading position that you may be taking, isn't going to be affected by having a longer term position sitting on the exchange. Yeah. Let me see here. I think that's what you were asking, right? If it wasn't, let me know, and I'll try to answer that there. Aswar, that's cute, man. But hey, listen, dude, if you don't like it, man, you can move on. I'm doing this for free, man. I'm doing this for free. I'm not charging you a dang thing here. And I'll tell you what, I do it better than most. So, if you don't like it, you can move on. No skin off my back. But try to be a bit more respectful, man. Just to people in general. I mean, if you're coming off like that to me, somebody you don't know online, it makes me think honestly that you're a pretty bad personality to people in real life, and that's awful, man. Life's too short. I'm very much a proponent of being cool with people, and being respectful, and all these kind of great things. So yeah, I'm the worst. Oh man, you're a mess. Take some risk. Let me see here. Andrew says, when you move to the DXY, are you concerned about the engulfing weekly candle and now seeing what used to be an upward support has now become possible resistance? Okay, let me jump there. Let me see here. DXY. You said for what time frame? Engulfing weekly. Okay. So we're looking at this. Am I concerned? No, not at the moment. Okay, so the first thing I want you guys to remember is an engulfing candle, whether it's bearish or bullish, is just a pause. It's not a guaranteed reversal, okay? You need to have follow through afterward, okay? So that's the first thing to pay attention. Now, the second thing is we've moved in sideways between the R1 and the pivot, right? So until we're impulsively breaking down or breaking out, well, really kind of breaking out above this level, especially if we come touch the pivot first and head up. So unless we're, impulsively breaking down through the pivot, I'm not overly concerned about it. But even if we do, we've been rallying up for quite a while here. We're getting probably pretty close to some sort of wave one kind of ending thing. So a pullback. I mean, even if this, okay, let me say it this way. Even if this turns out to be a reversal here, it may only get right here to this weekly demand structure right here, right around 94.89. It goes further, it might only get to the pivot. This pivot, as you can see here, is a significant area of support or resistance, right? So, we can't assume that it's automatically going to roll through that. We have to assume first that it's going to bounce because of the strength of that level. And then if it doesn't, okay, well then we look at, potentially right around this 92-100, 92 to 92.10 area, or, the S1 pivot. I guess what I'm saying is, if this is a reverse of some sort, I think it's more of a shorter term pullback, like a wave 2, rather than being some ultimate reversal and heading back down. Now, that's just because this is just where we are. Now, obviously, if we get some fall through and heading lower, then that increases the odds that maybe it is a reversal, and we play it. We play the movement as it happens until it gets to that point where we have a lot more confidence that it is a reversal heading, and kind of like with what we did with Bitcoin here, right here, where as it moves down, you have possible ideas of what that count may be, and then you have validation levels, and you're looking for the breakouts of those validation levels, and if you don't get them, it continues lower. Well, so you keep looking lower, right? Oh, but that would be the same thing here with that. Let's see here. But yeah, I mean, so, possibly, with all the overlap, whatever, maybe the count, maybe this is wave 5 and it's heading back here, maybe, but let me kind of get this off here. See, even on the daily, there's a bearish engulfing right here. Oh, I'm sorry, that's the weekly. He's a whiz. Get back here. So here's our 3-day here. Again, large bearish engulfing. Right back to support, though. So questionable. Daily, at least locally here, daily's basically hit that S1 pivot area, this support right here. It's trying to rally up, stoke RSI, reset down and oversold. It didn't bottom out though, but it did, it did reach here into oversold, trying to cross bullishly. So, we kind of look at this, okay, maybe we get a bounce. And so if we're going to get a bounce, what we want to see is an impulsive breakout above this pivot, this daily pivot. If we get that, that increases the odds that we're going to print a new high. If we get reject the pivot and it starts coming on back, then we have to look at, okay, maybe this is a stronger top here, but not necessarily reversal. Way too early to say, okay, it's definitely a reversal or something like that. As always, hope that makes sense there. What do I have on my count here? Let me scroll in a bit, zoom in a bit here. Yeah, see, this is kind of iffy on the count here, especially with this dip right here. Let me kind of see here. Here's a 2 hour, 1 hour. There we go. So, locally on the dollar here, I'm looking at potentially a 1-2, potentially breaking out higher here. But again, want to see that impulsive breakout above the pivot, and then we definitely have to get above what would be wave B up here, which actually happens to be, if this is 1-2, it happens to be the minimum expected wave 3 target. So, as a trader, I don't think too far ahead on the weekly. I mean, and you shouldn't even, even if you're an investor, you've got to give it time to play out. A single bearish engulfing candle doesn't do much of anything. Like I said, it's a pause until there's, significant follow through to kind of confirm that as a reversal. Other than that, it may just be a pause and then gain support and rallies back up. So yeah, you just want to be careful about that because it's such a large time frame that you can make absolutely, again, I say you can't make absolutely no ideas of what may be going on. But you have to be really careful. The only thing you can say about it is a bearish engulfing candle, so it might be a reversal. But you can't even really, I would say it's not even safe to really play it as a reversal yet until you get confirmation. But again, that's the problem with the large time frames. That's the problem. It takes more patience. You have to wait longer to see what's going on there. King Crypto, what's up, man? I appreciate you, buddy. Let me see here. Let me kind of catch up with you guys here. What are we doing here? Let's see. Okay, so Ali, when you were asking about how do you go and buy a Bitcoin as a longer-term investment instead of a short-term trading it, and you said you were thinking more in terms of where a good stop loss would be now. Well, again, if you're looking at investments, you're going to have to zoom out to them longer time frames, right? So if you're buying spot, it's different if you're buying GBTC, right? But if you're buying spot and you were looking to buy right now for an investment, the definitive stop loss would be right below this swing low here. Because if you drop below this swing low, well then it shakes up. It makes it very cloudy of what may be going on here. It may just be that this is still a triangle playing out. It could be kind of in terms with what what was it? Who was it? Oh my gosh, I can't remember who was talking about it. Canal. He was talking about the possibility of maybe this being like an A and a B and a C coming down lower. It still could be part of that though, not a 1-2. Maybe like a 1, 2, 3, 4, and a 5 to get lower here. And so so definitively, you would definitely want it no low. You definitely want it no lower than right below this on Coinbase here. It's 32. 9.33 and 33 cents. So 32 cents. One penny below that is where you'd want to know lower than that. If it was me going to invest in something like this, I'm probably going to look for a pullback toward this pivot. And so I would go long there and then no lower than this swing low here, but might be willing to consider a stop loss below this major swing low right here at 36,259, right at that area. Because, when you're getting in, if you're trying to get an investment in at the lowest possible point without just looking for the absolute bottom, again, you want to be, if you drop below this, I don't know. I think you're safest if you put it below the swing low right here. I mean, if you're doing here, then you have to pay more attention to what's going on internally as far as counts go here. And as I'm talking about it, I'm realizing that maybe, most people don't have as much experience with Elliott Wave as I do. And so that would be a much more difficult task. But yeah, me personally, again, I would look for probably the pullback toward this pivot area, maybe here 41, what is this, 41.6, 41.7, maybe that area to the pivot. and look for that. And then, that stop loss, easiest thing to do would put it right below this one, 1 penny below it. Because again, if you break down below it, then it means what you're thinking right here about this being the bottom is not, and which means it opens up to multiple possibilities of what could be going on. Whether it's just part of, a triangle, A, B, still C working out here, or it's part of a flat that's going to drop down below, or this is the top and, it's heading down lower. None of that's guaranteed. And none of that is guaranteed to be or not to be at this moment. So you have to be smart about it. Yeah. Let me see here. Kind of catch up to you guys here. So on the weekly, yeah, if you look in the DXY there on the weekly, yeah, generally speaking, if I saw an impulsive breakout that took out the pivot, not just the pivot, but this swing low as well. Kind of like the idea that, if it bounces you wanted to push above that swing high. But so if it was to drop down below the pivot, I want to see it drop down below this swing low here at 93.278 impulsively. That's going to be the first clue, okay, that maybe we're heading down to the S1. But, even if we were, that's not necessarily terrible. That gets you right here to all this activity, right? But, if we look at this right here, you've got basically a 1, 2, and then potentially you've got a 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4, which is what my count is, getting a 5, and that'll just get you a 1, 2, 3, 4 to pull back to the pivot area again, and then 5 to break out higher, right? I mean, if we look at this weekly, you can note your areas of your swing highs and your swing lows pretty clearly, right? So again, this is a 1, 2. And you basically got 1, 2, 3, 4, 5, right? So leading diagonal here maybe for a 1, 2. So 1, 2, 1, 2, and then 1, 2, 3, 4, 5. So you have that 1, 2, 3. You'll get your 4. You'll get your 5, which gets you your 1, 2, 3, your 4, your 5. So yeah, I mean, if I was just looking at this just based on, without actually going in depth with the counts, just looking at your major swings along the way, I mean, it looks pretty clear to that. So like in this case, if this is 1, 2, let me see here, and this is 1, 2, 3. You know what? Let me do this. Let me make a copy here real quick. That way I'm not screwing with the charts that I have for our Discord members. Let's go over here. Weekly. Whoops. Weekly here. I'm just going to get rid of all that. So again, if it's a 1, 2, 1, 2, right? So there's 1, 2, 3. See, it's kind of a short. It's 1.236. If this is a 1, 2, that gets us pretty short up there. Because you'd be looking at the 1618 is what you're looking for, right? So that has me kind of iffy on that. Maybe, let's see here. So this is an interesting one. Maybe, let me make sure this is a 1, 2, 3, 4. Make sure 3 isn't the shortest. It's not. Okay. So instead of this being a maybe a 1, 2, 3, 4, 5. So that being like that, maybe it's actually this right here. So maybe this is the 1, 2 here. And then this is 1, 2, 1, 2, 3, 4, 5 is a leading diagonal here, right? 1, 3, 4, 5. So there's your 1, 2. But see, again, then you're kind of getting into this lower thing. I was thinking maybe like, 3, 4, 5. Which would then get us this, right? So, but if this is the case, then that 3 is going to be short, it looks like. Yeah, see, again, 1, 2, 1.36 there. Now the other thing possible though is that we actually have it something like this, and so what we have is this 1, 2, 3, 4, 5. And so then this gives us, we have this doji candle here on the weekly. 3, and then A, B, 1, 2, 3, 4, 5, 4, 5. And so now our wave 3 goes right beyond the 1618, right? So, again, this would be a leading diagonal here in the form of a ascending broadening wedge. And so now you've got your 1, 2 here, and then you get your 1, 2, 3, 4, 5, right? So then you look for your circle 3 target up there, and it's still kind of short though. So still kind of short on that. See, this is a toughness of the way this is rallying here. So there are some options as far as we're looking at it. I mean, again, I believe you've got a 1, 2, 3, 4, 5 here. So that looks pretty clear as a 1, 2 here. And then it's just figuring it out, And so again, if this is 1, 2, well, you look minimum for the 1618 for your wave 3, and you try to figure it out, right? So minimum is this one right here. So, you could have this be a shorter wave in here because it's just taking you to that wave 3 area here, right? So what I was talking about is, possibly that maybe it comes down toward that weekly pivot. And so in that case, we'll just get rid of all this interior stuff here. But basically, you'd be looking at something along the lines of 3 here, right above your 1618, your 4, and then this becomes your 5, right? And so now, with that, again, you're looking for your pullback, right? You're looking for your wave 2 pullback now, right? And so if that's 1, that's 2 there. Again, you're going to look at the 38.2 as your first target. It's right there above that weekly pivot. And then you would look down here maybe toward, I'm not so sure I'd be a fan of 50, maybe 61.8 on that. Now, if you keep coming all the way back, you can see the 78.6 is your S1 pivot. So still a really good target, right? As a matter of fact, 78.6 being at that S1 pivot makes it a strong case for the idea, even if it doesn't reach that this is a wave 2. So, again, if it continues dragging down below that level, you can get your 1, 2, 3 up here around your 1618, 4 on that pullback, 5 gets you just a bit above it, not quite the 2.0, but just a bit above it. So yeah, the idea that if this is a bearish engulfing, that that it would bother me in some huge way, no, because all it would really state is wave 1 is done. We've got wave 2 on a pullback. We're looking for wave 3, breaking out after that. So my first target would be to, find support here around the pivot. Rally back up. Looking for an ABC down. If you get an ABC down and you rally off this pivot, all you're looking to do is break out above wave C. And that should indicate that wave 3 is in progress. The only thing that changes that is if there's a flat going on. So ABC for A, ABC for B, and then 5 down drops just a little bit lower for C. So you get a flat correction just sideways. Now, if this goes sideways, that's huge for Bitcoin because it gives Bitcoin the freedom. It takes off that dollar pressure off Bitcoin to rally and do that thing that you guys wanted to do. So that would be the good thing about this potentially, either ABC down here or even a flat correction that takes a few months, is that it takes a lot of pressure off, downward pressure off Bitcoin. So there's a lot more likelihood that Bitcoin can rally, which would just, add more confirmation to the idea that the bottom may be in. Yeah. Let me see here. me kind of catch up with you guys here. Oh, yeah. No, I always have stop loss on longer term investments. Yeah, the way I see it, if I'm in something for an extended period of time, I'm going to get a dang profit out of it one way or the other. It may not be fantastic because that stop loss is, for me, is going to be a lot closer, to where I'm in. And if it rallies way up, well, but I'm not going to not have that stop loss on. There's absolutely no reason to get into a position where you're up hundreds and hundreds or thousands of percent and then allow that to come all the way back against you and drop in and, drop below your entry. There's no reason. You have to take a profit at some point on that. Worst case scenario is, it turns and rallies back up at some point, but that gives you another entry to another opportunity to enter long. But if you don't do that, then you're always possibly going to see that continue lower beyond where you entered. And, if you've been in profit for years, it drops below where you entered. I mean, it's just stupid. I think personally, no reason not to have a stop loss on a long-term investment. Oh, Brian, I like that idea maybe, man. Oh, I like that idea for the signal service, man. That's great. Well, I mean, we also have the timestamps, though, on Discord. When we put that in there. But I like that idea. I think I'm going to do that. Good idea there, man. Okay, TV Canal, you don't understand my triangle because wave B doesn't make a new top? I'm not sure I really understand your question. Let me try and answer it. So triangles, wave B's and triangles can be above where wave A starts. If wave B terminates above where wave A starts, it's considered a running triangle. And so again, you would have A, B, C, D, E. The important consideration for a triangle is that your wave A and your wave B sets your range for the triangle. What I don't like about the idea that maybe this is a triangle is usually you should see it here in your RSI as well. So even if we zoom out here a bit, let's say weekly here, you should see your RSI consolidating as well. And we don't see that here. We get this lower low, which provides this bullish, hidden bullish divergence right here, right? Kind of. Because this swing low here is actually this move up. So it's not even really that great a signal there. But see, even this one dips down lower than this one over here. But what you should see, though, if it's a triangle, is that you should see your volume dropping off the entire way, and you should see your RSI, kind of creating it here. So if this is wave A and this is wave B, then wave C should be above wave A here. So that's, I leave it there as a possibility, but that's my concern with the idea that a triangle's forming, is it doesn't seem to follow through in the RSI. But again, I'm not really exactly sure what you're asking, but you said about the wave B being higher than where wave A starts. So yeah, I mean, it's definitely possible for a triangle. It's just called a running triangle instead of just a regular symmetrical triangle. But again, your A and your B set the boundaries of the triangle, and it has to consolidate within it if you're getting a symmetrical triangle. Yeah. That is what you asked? Okay, yeah. So look at me. I got that. Not going to let language differences, make it too difficult for us, right? But yeah. So it's the same way that you can get a running flat, and a running flat's just going to be your A, B, or your A, and then B breaking out above wave A, usually where you have the, usually quite a ways up. 138.2, 161.8, where you'd have a expanding flat, but all it does is it just comes down about 61.8 into wave A, and then it goes up, so you get a higher low off it, and that gives you a running flat for your flat. So yeah, they can do that. Probably confused you guys there just talking about that. Sorry about that if I did. Hey, 83 Madden, what's up, man? Or 90% correction in wave 2 at the DXY. I mean, yeah, possible. It's always possible. Like I said, my count right now, until it's invalidated, and it may be, is that I'm kind of looking at this right here. Well, we've got wave 2 done here, right around the 78.6 retracement. And then maybe 1, 2, 3, 4, 5 here. The other thing I was thinking, it becomes really iffy because you have to zoom in, and when you start zooming in at 15-minute, 10-minute, your waves get kind of questionable. But it is possible. Maybe this is a 1, 2, this is a 3, and a 4, and then this is 5, right? So this 4 would be a triangle, though. So A, B, C is A, B, C is B, A, B, C is C, A, B, C is D, and then A, B, C is E. So you get this triangle here for wave 4. And then you look at this, you go, okay, well, 1, 2, 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4. 4 maybe even printing a triangle here, but then, you get 5 a little bit higher up. And in that case, you could probably get it up in here, and then you've got 1 up there, 2 pulls back, 3 is the breakout above this significant resistance here at the pivot. So I'm watching either as if the bottom's in right there, but obviously if we get this breakdown below here, that'll say we're headed lower there, and then we can look at those larger count changes maybe with something like that. Let me kind of catch up with you guys here. What's the line I drew? What's on, Darren? What's the line I drew? 104,000 on Bitcoin chart. I think that was like a wave 3. I have to figure out which chart that was. It's this one up here, right? No, this is DXY. Let me see here. Bitcoin. I guess it would be that one, right? Yeah, so that's the idea that maybe this is a 1, 2, 3 heading up here. And so that would just be normally, expected wave 3 from when I wrote it. I got to check right now and see where we're at. If that's the bottom there. A little bit lower here, 97,950 now. That would just be your normal expected wave 3, your 1.618. But if this is the wave 5, the end of this bull run going on, I would expect wave 3 to overextend. Because this gives you a wave 3 here and a wave 5 at about 113,260. Not that I'm complaining about those prices at all, but I just think that this is going to be a harder rally up if this is the end coming up here. But yeah, that's all it is. It's just that the idea that this is 3 over here, this is 4 over here, and then this is 1, 2 of 5. 3, 4, 5. But again, if this is a triangle or even a flat still playing out or something like that, the targets will change because we don't actually have a 1 in yet. Yeah, that's what that is. Let me see here. What else do we got here, guys? I'm going to get some other stuff real quick. Oil. High volume node down here at that 78.6. Coming down. We need to see a breakout above the pivot here on the 1 hour. That'll hint that maybe wave 2 is done here. Breakout above wave X. Triangle resistance at 91.63. Should add confidence to the count. If the count is correct, 3, 4, and then this is 1, 2 of 5. Then 3 has a minimum expected target of 99.46. 5 will get you closer up here to 101.70. If you guys remember last week, I had the count I had, which was looking at a lower target. I said, but, the fact that we're so close to 100, I wouldn't be surprised to see 5, this wave 5, wave circle 5 kind of subdivide further than what it normally would do just to reach that 100. Because it's such a psychological and a round number that investors may try to get that, may try to push for that 100. But if we break down below wave circle 4 over here, it's this one right here at 86.75. If we were to come down from here and do that, this is 5 up. This could just be wave 5 done right here at 93 and some change. Because dropping back down below 4. If the count's correct, then that would say that wave 5 is done. And we'd be looking for possibly lower after, but we would definitely need to see it drop below this larger wave 4 here at 81.90. So yeah. Yeah, Eldo, great question. The signal service is a separate offering. I tried to figure out how I could do it where it makes sense giving this part of tier 3. But I already do so much for tier 3, and we've got some other stuff coming up for tier 3 that we're going to add in there. That will be separate services that can be purchased separately, but if you're tier 3, you'll have access to it. Signals were just something that are so, because they're curated by me. Personally curated signals. So it takes a lot more time and effort to put into it. I got to charge for it. But we are going to have other offerings that are coming up here over the next few months. That'll be separate purchases, unless you're tier 3, in which case it'll be included in your thing. And I think you guys are going to like that. I actually did yesterday was Monday. We did the Wyckoff on our Mondays there. And at the beginning of it, I discussed with the tier 3 members. So if you guys haven't watched that, watch it. Some of the things we're going to be offering soon, what I was just talking about there, that if you're tier 3, you're going to get access to it, not have to pay separately for it, but that it will be offered as a separate service as well. And some other plans that we've got coming up. So, guys, if you think I'm adding a lot right now, just wait till you see by the end of the year. I've got so much coming at you. It's going to be crazy. Let me see here. Let me get another chart here for you guys real quick. Oh, let's see here. Do I even have it up here? No, not at the moment. Let me find it here. Let's look at the NASDAQ composite, kind of see where we are with that. All right, so NASDAQ composite, I'm looking at potentially wave 2 being done here right around the 50% retracement. It does look like we've got a pretty clear 5 waves down. This does look like an A and a B here, so a C. C may come up here toward the daily pivot and fill in this gap over here from the beginning of February 2nd or so. And then we'd be looking for a move down. A breakdown below, well, I guess I'm going to move this up now. What is that? 13,934.78. So that's what I believe is going to be wave B. Since it's 3 waves down and we've broken out above that second wave. So a breakdown below this level should signal that wave 2 is done and wave 3 is in progress. For that local count, dropping down below this 13,236.56 here. This is a larger wave B. Is going to add confidence to this larger count. Heading back down there lower. Guys, I'm telling you, not a lot of good stuff looking at the markets right now. The legacy market, as far as that it's maybe just a dip and heading up higher. We'll see, but a lot of information coming in looking like that may be the top. But yeah, so that's the NASDAQ there. What do we have? We have E-minis real quick. Yeah, Andrew, inflation numbers make an impact on stocks or crypto. The expectation is that inflation should remain high. So I think it's priced in that it should remain high. If we get inflation that's tapered down, especially more than just a tiny bit, like some huge move to the downside, that'll rock the markets. That'll make things happen. Knee-jerk reactions. Because I think, again, the market's kind of in this phase right now where they're saying, okay, 3 to 4 interest rate hikes this year, tapering done in March, first rate hike probably in March. And so you need confirmation from CPI and jobs numbers or whatever to keep that going. So if the CPI number comes in as a large undershoot or something, I think that'll really send the markets in the other direction, because you don't have it'd just be a knee-jerk reaction, but it takes the market will start figuring, okay, well maybe the Fed won't be as aggressive as we've priced in. Looking at that, if it's anywhere around that number or whatever, then if it's a little bit off, there might be a couple of days of knee-jerk reaction, but then fine. If it's right around the number or higher, then again, markets just continue doing what they're doing. So stocks, however, probably overall continuing coming down minus their pullbacks. Yeah. Man, I love Forex, man, all the time. I think Forex is just the best market to trade. Because again, you don't get emotionally hung up on it. Because if you're trading legacy or crypto, you can try really hard, but you get really kind of caught up in it because the chart moves. You're looking for the chart to move right and up, right? Overall, gradually, continuing to gain in value. Forex, generally, markets move sideways for the most part, and so it's not as emotional. You find shorts, and it's easy to short. It's simple to short. If you're U.S., it's not like crypto where you can't short. Basically, it's easy to use leverage. There's no special things going on. It's all part of that. If you're in the U.S. and you trade day trade Forex, so you're making multiple trades a day, and you treat it like a business, you've got a good chance of treating that income as regular income versus capital gains. That was a court ruling, and so there's factors that you have to look at. You have to look it up online, but yeah, so there's just so much plus to markets, right? And they generally trend in an area, right? They're either long dollar or short dollar. I mean, your most liquid markets, which is where, especially if you're new, you should be concentrating anyway. Your Euro USD, your USD yen, your Aussie USD, your Loonie USD, your Cable USD, and those. And, basically the trend is what it is in relation to the dollar. Now you can get your really exotic pairs, where you got the two minor pairs trading against each other, and that could be a bit more crazy. But, honestly, as a trader in Forex, you really just stick with the most liquid pairs, the ones I was mentioning there. Even the Swiss franc, the USD Swiss franc, and a few others. I mean, there's no reason to trade the really exotic pairs because they're going to incur higher costs for trading and whatnot. If you're trading Euro USD, most places you can get it at 0.5 to 1.5 pips. Is your cost to play, cost to enter, cost to exit. So you can get it really inexpensive there. Other than that, right now, I like crypto. Right now, I think crypto is starting the rally off the bottom there. I think we've got a lot of good setups we're looking at. So I think that's probably a good play, looking for long entries on your cryptos. Again, I think it's a good possibility that legacy might be topped out. Now, it doesn't mean it can't go higher. Right? Again, we haven't definitely gone through levels that say, oh, it's most likely top, but right now it's not looking good. So it's iffy at best, I think, with the legacy market. Whereas the crypto market's looking after this move up with Bitcoin, rising tide lifts all ships. I think that makes a good case for crypto probably reversing, giving you a lot of good opportunities to go long. And then, of course, like I said, Forex is just, it's simple to trade in terms of you don't get caught up emotionally with it. It has to go here or it has to go there because it's going to make it, something you own worth more and more and more and more. You're just looking at trades, right? You don't. You can invest in currencies. The time to do it would have been going, investing long in the dollar last year, or selling euros at that point. But yeah. Well, I don't know. That's really weird if legacy tanks and crypto runs. I mean, if we're looking at crypto, maybe just, summer of this year or something, kind of finding a top, it doesn't really make a whole lot of weirdness. Again, remember, each market trades according to risk on or risk off. Crypto just happens, to have a lot of people looking at it now. New thing, exciting, big movements, a lot of volatility. So people might normally not get into stocks right now because stocks are but they might be willing to try and make some money off crypto because people are emotional. They're not logical most of the time when they're trading. So I don't know that I really say that it'd be weird, but yeah. There's no real problem with it. Now, I think what would be weird is if stocks have topped and continue down and down and down, and crypto just continues up and up and up. That might be kind of weird. But even that, I could potentially see a case for, just again because of what Bitcoin is and cryptos are and where we're at with it, and on the verge of, like Wells Fargo was saying, potential hyperinflection point. So I can't even rule out that wouldn't happen. It'd be weird, but I could see a case for it. Yeah. Let me see here. Hey, have a great day, Andrew. We'll see you end of the week there. Let me see here. Asian Rich says, with the cubes looking like a potential breakdown, would tend to drift to trading another market rather than Bitcoin. Yeah. Well, and and here's the thing, guys. Even if the overall stock market's moving down, you're still going to find, stocks that are going to buck the trend, just like you do with anything else. You'll find something that'll buck the trend. You just have to look for them a bit more, and you'll still get opportunities to buy bounces if all you want to do is long. As the legacy market comes down, so there's opportunities there. But I think crypto is right now setting itself up for potentially saying, hey, the bottom may be in here, and some further upside. So give us some good opportunities to go along with some cryptos. Yeah. Let me see here. So yeah, that's kind of where we're looking at, guys. So stock market kind of iffy, but leaning toward the downside more. Maybe the top being in. Crypto looks like it may have bottomed. We definitely want to see some further up by Bitcoin, but I think it's making a good case for the bottom potentially being in and making starting the next leg up. Forex is Forex, man. It's great. You just got to pick your pairs and you get in there. And again, guys, if you're new to Forex or whatever, I would suggest you just stick with the main liquid pairs, the ones I kind of mentioned there. Stick with them. There's no reason to get exotic on it. And go with a minor pair versus a minor pair. You just because the cost to actually trade that is significantly higher. So you're already starting well behind the 8 ball and something like that. And it's not as simple. Again, if you stick with the major pairs, then basically it's the idea is the dollar advancing or is it pulling back? And as long as you have that understanding, then you can effectively trade those pairs in there. Made a ton of money off, shorting the euro over the last year. Long in the dollar. The only one that's a little bit different is USD yen. It kind of tends to do its own thing at times. So you might see like the DXY pulling back, but the USD yen is rallying. It's just because of the whole what's going on, again, where Japan stands and everything. Especially, because Japan was such a big part of the market, along with the U.S. there coming into, late 80s, early 90s. And then they got that lost decade. I don't know that they're necessarily not important to watch anymore. I still watch them. I still think USD yen is still something important to watch. But that would only be a little bit more off. But yeah, it says, well, Blazed about USD yen. Yeah. Other than that, guys, if you're new to Forex, there are commodity currencies out there. So the Canadian dollar, the loonie, is considered a commodity currency because so much of their country's revenue, I guess, comes from the export of oil. So if oil prices are rising, that's a boon to the Canadian dollar, the loonie. Other countries like Australia, mining is a big thing, and then also their international trade with China is another big thing on them. But if the price of gold is rallying, that's usually a plus for the Aussie dollar there, Kiwi even. If they're getting favorable trade there with China, that'll be a boon as well, because China is such a big market for Australia. But yeah, so there's other little things that kind of add into it, but at the end of the day, it's kind of like, if the dollar's rallying, then you want to look for opportunities to long the dollar against those other pairs. If the dollar is dropping, then you want to look for opportunities to short the dollar against those other pairs, just in general. So yeah. Okay, guys. So there we go, guys. Listen, I'm going to get out of here. I've really kind of gone over. I appreciate you guys, putting up with me and then letting me share my thoughts and my my observations, and again, just giving a lot of emphasis to the things that I've learned over the years, which are more important than where it is. A lot of times as new traders, how do you know if you're an amateur trader or a new trader? How much deference do you give to the chart versus these other things I talk about? If you're more concerned about the prices on the chart, then that should clue you in that you're a lot greener, a lot more of an amateur in trading than what you may think. Again, we tend to lie to ourselves just in life about everything, especially in trading, because these other things I talk about, risk management, emotions, all these things, and I continue to push on them so that it really sinks in, because those are by far the most important parts of trading. Because you can know all this technically all you want, but if you don't understand that other part and you don't accept that other part and you don't, internalize it and understand about the emotion and everything, it doesn't matter what you know about this technically, you're not going to follow through. You're not going to take the trades you need to trade or that you need to take at the times you need to take them. You're going to be emotional with your trading. And it doesn't matter that you knew it. You're not going to do it. And that's why I talk about it a lot, guys. Because it is that important. So, all right, guys. Listen, I hope you guys have a great day. I hope you guys have a great week. If you're in Discord with us, of course, I'll see you guys over there. If not, I look forward to seeing you guys checking in. And bring questions as always, man. I love answering questions. At least the best of my ability and, time constraints and everything. But bring them in. We'll see you guys on Friday, 11 a.m. Central Standard Time. And as I like to remind you guys, the only thing you control in the market is how much you lose. That's it. That's the only thing you control. So risk management is the most important thing that you ever do day in and day out as a trader. It is where you make your money. If you understand that, you're golden. If you don't, ask questions. You need to understand it. Because if you don't, you'll just make mistakes that you don't need to make, all right? So keep working on risk management, everybody, and I will see y'all later. Take care.